Hello, Neil. You must be indubitably wondering why you're here. It's because you're here vis-a-vis to smash the like button and subscribe to my channel. I'm so excited for the Matrix movies. Today, I am going to rate and give you my thoughts about your riskiest investments. So I posted a story to my Instagram asking you to share with me your riskiest investments, as Corey and I were flipping through my first edition MetaZoo collection of holos and reverse holos, which I also know nothing about, but I know MetaZoo's shiny, and I like shiny things, and I've spent way too much money on it. And that is Intro to Investing 101 on what not to do. Don't invest your money in things you know nothing about, but sunk cost fallacy? Who cares? I'm in too deep. So let me share with you my riskiest investment right now. I spent my entire life learning how to do this right here. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the interactive video. So my riskiest investment was really my career choice. I used to do card tricks. I still do, but I used to too. Not for a living, well, sort of. Because when I was 10 years old and my parents would go to work, I would sneak out of the house and go to the Las Vegas Strip, where I would perform magic and cardistry outside and in the casinos, which is how I got good. And banned from the casinos. No, I didn't get banned, but I did get kicked out a few times. So fast forward to when I was 19 years old and I was working for a startup company in the magic industry. And my job was video production and taking care of the artists' cardistry and magic tricks, and it was a lot of fun. And the reason my career went down that path is because when I was 5, I was part of a circus family, because my parents were cirque acrobats and they used to do a lot of cool things, and we would travel the world together. And true story, up until the age of like 10 years old, I thought everyone in the world was a circus acrobat. So one day, I walked up to a kid and I asked him, "Hey, what does your dad do?" Thought he was gonna say, he rides the elephants. Instead, he's like, "Oh, he's a police officer." And I'm like, huh. My mind was blown and things were never the same again. And because of my history with entertainment, because of how I grew up in the non-academia traditional sense, I didn't want to grow up to be anything normal, because all I saw was circus acrobats and elephants. So I couldn't say, "You know what, Mom? I'm gonna be an engineer now." It just didn't happen. So I dropped out of college, which single-handedly was my best and riskiest investment decision that I've ever made. I'm not saying you should drop out of college too, that's just my path, but everyone's path is different. So now let's talk about your riskiest investment. So going through a few answers, this one is really popular, so I'll just take this one. Saqib Khan 07, who says one word, Doge. And this is really interesting because this year we saw the rise of people like Pro the Dogecoin Millionaire, my friend who YOLO'd literally all of his money into one crypto, Doge, and had it go all the way to $3 million, where he did not sell, all the way back down to under $1 million, where he still has it today. And even though, yes, he's still up substantially, I would argue that his initial investment decision was based purely on speculative price hype. So here's a really good way of putting it, and this is one of the best things that Warren Buffett has ever said, and it's how you can tell whether something is a really good investment decision. Think about it like this. Your second best investment idea will never be as good as your first. So take me, for example. If I'm somebody who believes that Bitcoin will someday be worth several $100,000, which I 100% believe that in the next few years it will, if that's the case, why would I bother investing my money into anything else if I know it's not going to guarantee me that same rate of return? There are other crypto coins that might give me a way bigger return. Maybe coins like Ethereum that might someday be accepted as currency or might become really popular, or maybe they won't. And if that's the case, then investing in anything else might be considered gambling. I think we can both agree that there is no world that exists in the future where Bitcoin and Ethereum are not at least in the top 3. So why not own them? And if you're thinking to yourself,
well then Andre, why don't you just buy all the Bitcoins then invest all your money?
And the reason I don't is because I don't want to put all my eggs in one basket, and because there are things I don't know that I don't know. And also because one of the basic principles of good investing is that you should YOLO all your money into one thing. No, it's to diversify your money across all the different assets. That's why I try to own some of the best of crypto, some of the best of stocks, some of the best of real estate, Pokemon cards, whatever it might be, you get the idea. And if you're thinking, well, how is that any different than investing further down the line within the crypto space and buying up Dogecoin? And the reason it's different is because I'm not YOLOing all of my money into one asset that is objectively more speculative than its leading index. Does that make sense? I'm not saying that everyone should do this approach. I just think this is a really good blueprint when starting to invest. So let's see what else people are saying. GS Crow 5 says TTCF. Make sure Jeremy knows. Jeremy, now you know. TTCF, super risky. I'm never gonna hear the end of that on Millennial Money. This one, marriage. I got this one so many times. It was either wife, husband, kids, relationship, girlfriend, boyfriend. So here's something interesting I know you've heard of before. Money is the leading cause for divorce. It's also not true. It's not the leading cause, but it's definitely top 5. There's different studies, but according to insider data, it shows that 36.1% have said that money contributed to creating tension, which eventually contributed to divorce. But what's interesting is that it's not a lack of money, it's the fact that two partners were different in how they viewed money, where one was a saver and wanted to invest for retirement, while the other just didn't know how to manage the money and just spent it all, right? And obviously this can create a lot of tension, especially if you share bank accounts, which is why it's super important to be on the same page about money. And also maybe being attracted to the other person, but who cares? Money! All right, so your boy Callie says buying Bitcoin at $60,000. Yeah, so a few things about that. So if you're going to buy and invest your money into speculative assets, especially in the crypto space, the best thing I think anyone can do is dollar cost average. Because if you would have done that with the last cycle when Bitcoin went to $20,000, you would have been made fun of, but you would have had the last laugh because you would still be up today, especially if you dollar cost averaged and continue to buy through the peaks and valleys, because sometimes you'll buy when it's high, sometimes you'll buy when it's low. So if you invested your money at $60,000, if you continue to invest your money when it's $30,000, $40,000, I can almost guarantee you that you'll end up making money over the long term. So Christus's response says, I know it's stupid, but I put all my money into Virgin Galactic when it was $45. So I looked up Virgin Galactic SPCE. The price right now is about $24.50. So roughly 50% down, not quite, but yeah, that's pretty substantial. So here's the thing I'll say about that. Whenever you're buying into a stock and into a company, you're owning a piece of that company. It's not just a piece of paper, right? So you go into it with the mentality that you're owning a piece of this business for the long term. But if you feel scared that you're 50% down and you feel like you want to sell, that's usually a sign that you invested way too much money, which I guess you put in all your money, which is a lot. That is why, no matter how much you think you know, no matter how much I believe Bitcoin's gonna go to $100,000, I will never put all of my money into it. All right, we got crypto, oh, Doge, my wife. So many of those, Bitcoin. Oh, this is a good one. John V Dently says, the indoor play center I started with my own money left me $500,000 in debt. So one thing I've learned from business people is that most of them, if they're starting a really risky business venture, like creating their own business, most of them will borrow other people's money to do that with. Because sure, if you do it with your own money, you could succeed and keep 100% of your business, which is cool, but most people don't succeed, which is why most of them will borrow someone else's money, because even if they fail, they can easily declare Chapter 7 bankruptcy and recover. The only downside, obviously, is your credit history is gonna be ruined for the next 7 years, but I'm sure you already knew that. And this is a good one right here. Roulette guessing says $100 bill. This is a story I've always wanted to share with people. So my friends from the magic industry came up with, and I kid you not, a bulletproof way of beating the roulette. Now, later in life, I would realize that it's actually an old strategy that someone else came up with. It's called the double down strategy. And here's how it works. So you go to the casino, you go to the roulette game, and you bet 100 on black, right? Let's say you win. Cool, you won, you're a winner, walk away, just quit. But let's say you lose that $100 bill. The next hand you bet should be $200, so double the previous if it's a loss. So in this case, if that $200 hits, then you recover your $100 and you get to walk away with $100. But let's say you lose again. So now you have to bet, instead of $200, $400. So if you win the $400 one, then you recoup the $100 and the $200 loss plus $100, and so on and so forth. And this actually works, believe it or not, except it doesn't. The reason that it doesn't is the casino knows about this strategy, and that's why they created house limits. Right now in Vegas, I believe the average for roulette is $5,000. That's about the max that you could bet, which means pretty soon, after a few losses, you will not be able to bet a hand above $5,000 and you'll never get the strategy to work. And if you start with a $1,000 bet instead of 100, in 3 losses, you'll just exceed it. And also, on paper, this works, but mentally, it does not work because at some point, you'll get to the point where you'll have to bet $5,000 just to win $100 back. And mentally, this is very hard to cope with. So anyway, the lesson here is don't gamble and keep your 100. Julian says, all my money is in GME right now. So yes, I have some money in GME too. I'm here to support the social movement, but definitely not all of my money. So please be careful and invest responsibly. Fulvio789 says the OMI token. So I have a ton of OMI. In fact, here's the quickest way of losing credibility on the internet. Bam! $75,000. I still have all of my OMI tokens. It's down from 150K. This is one of those investments that's either going to the moon for me or going all the way to zero. Now, in the long term, I think they're going to do really well just because they have a really unique platform and they have some of the biggest licenses in the world, but this is one of the most speculative investments that I've ever made. Pixelated rocks worth $30,000. What they're referring to is most likely an NFT, and it's a crazy world we live in because an NFT of a pixelated rock sold for over $1 million. I don't even know what's going on anymore. Wow, Dane Kang's response is playing poker for a living. That's pretty cool. I play poker for a living too, with my life. Mahmoud says, not investing at all. And what's really interesting about this statement is that if you invest your money into something like the broad market index fund that tracks the S&P 500, you're virtually guaranteed to make money over a long period of time. And what's crazy is that if you don't invest your money, you're virtually guaranteed to lose money in the long term at the rate of 2% per year. So your dollar today is gonna afford you 98 cents in terms of what it can buy tomorrow. And that's a crazy world we live in that I can't even wrap my head around, that if you invest your money, you're almost guaranteed to make money. And if you don't and you just save it, then you're guaranteed to lose money. This is crazy. So start with at least $1, and once you get comfortable with seeing it fluctuate up and down a couple pennies, I promise you'll be more comfortable with investing more money. Atranikin says, Coinbase. We're in this together. I am down 36.5% on my position, which definitely stings, but it's not as bad as it once was. But here's the thing about Coinbase. In the next few years, it's going to do incredibly well as the space of crypto, the market cap grows, because there's going to be new people joining the industry. They're going to be buying more coins. As long as there are people looking for gold, there will always be people buying shovels. So ABS. Always be buying shovels. Topenko says enlisting in the army, which is very risky, so thank you for your service. And fun fact, I was gonna go to the Air Force Academy after high school, but I didn't get my US citizenship on time, so I didn't get to go. My life would have been so different from today if I actually had it at that time, which is crazy, but thank you for your service again. And Morat Bayral says, in myself, man, I'm too risky. You know what they say, I'm just too dangerous for my own good. Brainless Gonzo says, my Skyline, lol. So that's the Nissan Skyline, which is a car, and cars can be very interesting alternative investments. I know Graham Stephan has his GT40, which has obviously grown in value, but the thing with me, and maybe I'm not a car person, is that I don't like holding investments that have a recurring cost to them. And because of that reason, I just can't justify owning cars. But that's not to take away from the fact that they can grow in value substantially. Ooh, this is a good one, Peloton. This is a really interesting company that I've been looking into for a while now that I can't for the life of me figure out if this is a company that's going to stick around for a while, if it's going to be challenged out of existence by a tech giant like Apple, or if it's going to be another Bowflex. I don't know if you remember Bowflex, but this was something that in the early 2000s was this crazy fitness thing everyone talked about that no one remembers anymore. Now, if you had bought a company by the name of Nautilus in the early 2000s, 21 years ago, Nautilus owns Bowflex. That stock just went sideways for the last 21 years. You wouldn't have made any money. Now, you wouldn't have lost money, but you wouldn't have made any money either, which in the last 21 years, that is very discouraging. And if anything, I feel like this is a case to invest in broad market index funds instead of trying to pick individual stocks. A Holloway 2 says, Planet 13. Thanks, Jeremy. Someone forward this video to Jeremy. Thanks, Jeremy. Thanks a lot. In the end, though, everyone knows that the riskiest investment anyone can make is not smashing the like button and not subscribing to my channel. But my worst investment that I've ever made was in 2017. I bought a bunch of small market cap cryptos like Nano, IOTA, XRP, and none of them really made me money. I didn't lose money, but in the end, I thought I could just diversify and strike it rich, but I should have just focused and responsibly diversified into what I knew, instead of just gambling my money away. But as always, don't forget to have a great rest of your day. Smash the like button, subscribe if you haven't already. Go get up to $250 worth of free Bitcoin with this BlockFi link right here. Go track your stonks automatically with the spreadsheet, link down below in my Patreon. Love you. Thank you so much for watching this video. I will see you back here on Monday, Friday, sometimes a Wednesday. Take care.